Hey guys, so this is going to be a 5-part series on how to trade as a day trader. So since we focus of being a day trader, it means our reference time frame will be on the daily, and the rules are all going to reflect based off of the daily time frame. So primarily we want to start off by determining the daily trend. So whether it's currencies or crypto, it's just the same aspect. Alright, first thing you want to do is you want to squeeze up your chart, and when you squeeze up your charts, you're looking for prominent highs and lows, right? So this is a prominent high, this right here is a prominent high, this is prominent, this is prominent, and these are prominent lows, these are prominent lows. And in some situations you might not be able to tell whether this is prominent or this is prominent, right? So you just still mark them up, and what I do to differentiate them is I'll bring up the straight line and I'll just run it through, right? And then if price gets to break with the wick or with the body, I then know that okay, we have actually gotten a key point. So based off of all these key levels that I marked in red, I'm just going to remove that. Next, I want to denote them with structural highs. So for my structural highs, I usually use the double X. So I usually put a double X on it, so at the top right there. So this tells me that this is a key structural point on the daily time frame, right? So when we get, so if price was to take it out, it means the daily trend is being bullish as of this point to the next key structural level. So I'll just mark it up once again, this high, all the way to when it gets broken, and I will signify that this is a daily structure, right, up to here. Now I want to determine to know if this is a valid pullback. You see these two daily candles, I want to know if it's a valid pullback. I'll just use a straight line. As long as price can break it with a body below or above, depending on where the pullback is, that informs me this point right here is a key structural high. So since this is a key structural high, I'll state it this way. Let me just adjust this. Next, since this is our low, I'll mark it up and state this is also a daily key point. So I'm using 2 candles for our pullback, right? 2 or more candles for our daily pullback. Once again, this is our high, price gets to break it to the top side. So more of a manipulation is what we had formed on the daily time frame, where price was bullish, it turned bearish and still went back bullish, right? At the end of it all, once again, price still turned back bearish again. So a couple of times this happens in the market, right, where the market just acts weird and the trend does not just go so smooth, right? So a lot of times what we all want to see as traders is a very clean trend like this, you know, just calm, respect, keep on going, something like this. This is what every trader wants to see, but in the reality of the market gets to be different, right? You get to see this type of manipulations happening in the market, and you just have to have rules that protect yourself and your capital. So what I mean by protect yourself is your mental capital as a trader. So everybody has what I would say as a mental core, right? So there's a limit we reach where afterwards you can't take anything more and you break down. So you will no longer be able to follow your trading rules. You become emotional and irrational. So what you want to do is make sure that within your trading plan you have the protections. Just like you have stop loss to protect your capital, you also need mental stop loss to protect yourself from all these manipulations that the market does. Because once the market start manipulating a lot, let's say you were expecting that continuation, then it fails, then you're like, oh, we're bearish now. And then you try to sell, it fails again, and you're like, oh, okay, yes, but bullish now, and then it fails again. Yo, that let's be honest, that is frustrating. Like Forex is a scam. At that point, you're like, this thing does not work. Why is it now that I want to trade? All these manipulations are happening, but it's real. It's printed on the charts, right? So we can't come and act like this doesn't exist, or it will not happen to you. The only way you can stay out of these situations is if you have rules that protect yourself from them. If you don't have rules that protect yourself from them, you just have to accept the losses and move on, right? That's just the logic. So I have a few rules to protect myself, not all of them, but a couple of them that are very common, and I have rules to protect myself. The other ones, my stop loss will protect me from them. Else you will just become so scared of losing or even trading, and you don't get to do anything, right? So this, we get to see the structure, right there. This is now the next high, which gets taken out right there, and that is simply how to mark up your daily key levels. That's the key major points on your daily time frame. So what I would like you guys to do is to go look at Euro USD, right, and mark up your daily key structural levels or key swings, just like you can see I've done right here. So once you're able to do this, you'll be able to go to the next level. Alright, so it's just as simple as this. You could just keep marking it up, and right. So guys, with this, you'll be able to know your key structural levels of where the market is, going, and how to trade it. Now let's move on to the logic of how we're going to be trading with this model, right? So here's the logic. The logic is, let me just add this X to all these lines I've made to make it easier to understand that we're discussing about the daily key level, right? So I just want to put this at the bottom so it will be visible. Okay, I'm done now. This guy was where it ended. Okay, so let's complete it. We're almost done. Let's just have it all completed, right? So the process is simply for you to track whether the pullback made two candles, right? So this is the first candle, this is the second candle, it broke the first. That means that is a valid daily pullback. That's all we're looking for. That means if you find a high, all you want to do next is find the low and mark it out. And when you mark it out, you want to signify it with the double X. That's this level. If price comes and breaks it, it's broken the key daily points. So we can also signify up here that this is our key daily level. Once more, this is our high. We can mark it out. This is our key daily level. Right here is also another key daily level. And let's just add the notation sign right there. And this point, alright, can you guess, is this actually a key daily level? Let's confirm. This is the first candle, the first bullish pullback candle, and this guy is the second one. So from that point we can tell that, oh yeah, this is actually a valid daily key points. Now you'll probably be asking yourself a question, but it broke with a wick, it didn't break with the expansion happened with the wick, not with the body. That's fine. Alright, so it's actually a couple of times this could be a sign that the daily is about to reverse. When you have a daily pullback being these two candles, and then price comes to do an expansion, but it does it with a week, that is a sign that if you're about trying to catch any of this bearish continuations, you're going to be on the losing side of the market, right? And even if you were like, oh, okay, maybe this is weakness, let's try and catch something here, you get to see you take a loss as well. So that is the general logic of what we have going on, right? So that's like the basic logic of how to analyze the market on the higher time frame, being the daily as a day trader. Okay, so let's wrap this up so we can explore another logic that is important. Okay, now for the last one, we have to examine where is the structure from there. On looking at this, we can see there was a 2 candle pullback. Price turned bullish as of this point. From here all the way to here, we have been bullish. So we need to know, is this a value pullback? Is this single candle value pullback, or is this the value pullback? According to the rules I told you, we need 2 candles to have a value pullback. So it means right here, this was our pullback, and this was the expansion formed right here. So now that we know what our pullbacks and expansions are, we can place at the high and states daily. So it means at this very moment right here, we turned bearish, right? Since we turned bearish right there, this is our high, and right here is our daily low. Now we can state our daily notations once again. Now just put this at the bottom. So it means the daily structure on Euro USD right now looks exactly like this. So you can see it's not really all the best of trend, it's not the cleanest or the fanciest either, but it is what the market gave us. This is what we have. So we have to make sure that we make the most out of it and we protect our capital during the period when there's nothing worth taking risks on, right? Just like you see this levels, you see all these levels, right? So now there is something I want to inform you guys about. A lot of the times when a daily key level gets taken, let's just look at it, right? And let's count. Let's start right from this very level, right from May 2025. We'll get to see that whenever a daily key level gets taken out, one thing will happen. One thing usually happens a lot of the times, not every time, but a good number of the times it occurs, right? When our daily key level, being our daily swing points, gets taken out, such as, by daily swing points, I'm referring to these levels, right? These levels. Picture what usually happens when they are taken out. So from this very first point, when this level got taken out, right, we didn't get to have a pullback. Price just continued going bullish before it got here and have a pullback. So this one, we can say this was the first occurrence where we didn't have an immediate pullback. But subsequently, on the second one, after this level got taken out, right, you see this level right here, after it got taken out, we had a pullback. You see this deep pullback that occurred? That was the first one, right? So this is our next daily level right here. Daily, let's just put that at the bottom. So we notice that after this daily key point, this one here, got taken out here, a pullback occurred, right? Very easy stuff, right? Follow me. All right, so the next time was this daily key point, this one here. After it got taken out, we didn't get the immediate pullback, right? we didn't get an immediate pullback. So now we are on 2. This one and this guy didn't give us an immediate pullback, but we are currently on 2 breaks that occurred where price gave us an immediate pullback. So if we move on to the next one, after price takes out this daily key point, we got that immediate pullback. Alright, so we can just mark this. This was another daily point, right? At the bottom. Now if we check this guy, when this daily high got taken out, although it got taken out by week, it's just like this guy, we got to see that pullback occur. Alright, and remember I told you guys that a lot of times if a daily high gets taken out by a week, that could be a reversal sign. But in this case, it got taken out by a week, it did not reverse, it didn't get to break this previous high. But when price still came here, broke it with a week, we can get to see that pullback led to a failure of this bullish trend. But even after that failure, right, you can see when this daily level got taken out, we had an immediate pullback, and this immediate pullback led once again to this key level being broken. So after this key level got broken, we didn't get an immediate pullback, but eventually we did get a pullback, which was led all the way to this next daily key point being taken out. So when this daily key point was taken out, we got a pullback. You can see that, but this pullback didn't go to take anything special within this point. Now let's look at this one. When this guy got taken out, we didn't get an immediate pullback, but eventually when price shifted on the lower time frame, like on the 4 hour, we get to see a pullback occurred. So there are now one of two things you are noticing, that when a daily key structure gets taken out, you will either have an immediate pullback just like this places, or you will not have an immediate pullback. Price might just continue up until when the lower time frame decides to change, and then a pullback will occur, and when it changes again, a continuation will occur. So the reason is that we want to make sure our logic aligns with the logic of the market, because if your logic does not align with the logic of the market, you will trade and you'll be in fear, and you'll just be trading what you feel like. Maybe you come today, you feel like, oh, I want to buy, I'll buy, I want to sell, I'll sell. But if you understand and you're following the logic of the market, a lot of times you will know that, oh, this is a daily high, it just got swept, and we're seeing on the 1 hour time frame sellers are coming. Okay, I'm trading the pullback, but once the 4 hour or the 1 hour shifts back being bullish, mostly the 4 hour shift back being bullish, I can look for what continuations in line with this new bias that are forming on the daily time frame. Because remember, I told you, even with weeks on the daily, it can shift a trend. If you're trying to be bearish all to this point, I'm like, oh, I'm looking for sales, I'm looking for long-term sales, what would have happened? You'd have still been taken out, because only with a week break price shifted bullish, right? And now if you're like, oh yeah, because we're now bullish at this point, say all these buys, let's continue buying. With a week break, price have shifted back bearish. And if you're looking for further buys, guess what? Long term, you see what the market had done. You are still trying to catch these buys, and the market has shifted bearish with this week break formed here. So when on the daily you are meant to be looking for, after this lower time frame buys would have happened, you'd have meant to be looking for 4 hours to shift bearish and look for long term shift. That's like maybe 3-5 days sales, right? You'd have still been looking for buys when the market has shifted already on the daily time frame. Now once again, you can see it after a daily gets taken out, a lot of time pullback occurs. After this daily key point gets taken out, pullback occurs. This daily key point gets taken out, pullback occurs, right? It goes on and on and on and on. And we notice sometimes it doesn't occur, sometimes it happens. But the number of times where this situation happens is more than the number of times it doesn't. So that's the aim of trading. Your aim as a trader is to make sure you are trading what happens or is more frequent in the market. Like something that happens 66% of the time, right? So 66% of the time, the market is most likely to, after it takes out a daily key point, to do a pullback afterwards, right? versus you see this period when a daily key point gets taken, whether it's continuation or counter. It Although this one is for the bearish continuation, you can see how huge this push is. But if you compare it to these levels, that is this level 1 and this level 2, you can see it's first time, second time of this bearish push. Is on the third one that price did a very deeper or prolonged expansion. So if we do 3 divided by 100 divided by 3, you can see that 66% of the times price did what? An instant pullback after a daily key point was taken. Now let's look at the other one, right? That is this key point here. After price took out this daily high, you can get to see this was just by a week and another candle. Next, price did what? A pullback. After price took out this daily high with the body, subsequently we got a pullback. Now after price took out this point, we got a pullback, but this pullback was not a valid pullback, so it's more like we're still in expansion. Now after price took out this point, we finally got a valid pullback, and this pullback took out this previous high. Now this is a situation where price breaks. It did not do an immediate pullback, but eventually it did a shift on the 1 hour or the 4 hour and led to a deeper pullback. And we can just go on and on and on and on. So that's just basically how the market usually moves on the daily time frame. A lot of the times after the market takes out your daily key points, it does a pullback. It takes out your daily key points, it does a pullback. Right now, these daily key points, once they are taken, you see these daily key points, once they get taken, they get to do one thing on the lower time frames, right? They reset your lower time frames trend. So let's say your lower time frame, let's say on the lower time frame was moving like this, it was bullish, right? Once this point gets taken out, your lower time frame trend is open to a reset from here. So you might have been on a bullish trend, but your lower time frame is now prone to the new trend that might be forming here, or even the smaller trend that forms and break. So once we go on the lower time frame, I'll show you that more clearly. So this is just the first part introduction to how to mark up your trend on the daily time frame, and how to know what is the valid daily point and the logic of trend continuations on the daily time frame. Most importantly, how the daily time frame does pullbacks after it takes out its previous